After crude oil witnessed this long stretching downward trend since this top here in September 2023, we've now recently seen that massive price surge to the upside, reaching levels of $120 per barrel at the peak. And so as we are currently retesting this resistance at around $94, $95, which is basically marking this top here back in September 2023, we obviously have to ask ourselves the question, are we about to see a continuation of this price surge here to the upside, or are we about to see a decline here in prices? And so to answer that question in today's video, we will not only take a look at those technicals, but also at the fundamentals, macroeconomics, and the geopolitics of this commodity. So let's first have a look at the technicals. We do obviously have this resistance, but we also have to take a look at cumulative volume delta, which has certainly spiked to the upside as well. And so as we're currently retesting this level, we also have to keep in mind that we do have to take a look at the volume. The visible range volume profile is currently showing you that the majority of volume has actually occurred at those price levels right here. And so from that perspective, it seems to be just a question of time, essentially, until we do see those prices to reclaim those lower levels again here at around $80, at around $70. Those have been actually the regions where we've seen a lot of consolidation, a lot of volume being traded, and those areas seem to actually be in play a lot in those latest price movements. But essentially, we have to understand those cycles, we have to understand those trends and the underlying drivers of this commodity. And so what we'd like to take a look at now is the latest geopolitics, macroeconomics, and fundamentals. We have the US currently announcing that around 172 million barrels of oil are going to be released from the Strategic Petroleum Reserve. That is obviously leading to more supply, and that ultimately is a bearish factor. However, we have to keep in mind that the oil prices haven't really pushed higher since then. And we also have to keep in mind that this is just a relatively small chunk of the supply that would actually be necessary. And so it's certainly questionable whether this is actually leading to lower prices, because we've seen a lot of volatility and we've seen a lot of bullish pressure actually in the past, and we're currently seeing it right here as well. And so we like to take a look at the long-term cycles to really understand what is currently happening, because we do see that crude oil is, as natural gas as well, actually moving in cycles. And so what you're currently seeing on the chart right here is the fact that we do see divergences between crude oil and also the copper to gold ratio, and also the gold to S&P ratio and the gold to silver ratio. And what you can beautifully see here on the chart is a divergence happening between the copper to gold ratio and the crude oil prices. For example, here in 08, in 2008 with the great financial crisis, we've seen that divergence happening between crude oil moving higher and the copper to gold ratio moving down. And we've seen those divergences always lead to those sells or crashes, not only here with the great financial crisis, but also here in 2011, in 2014, and several other instances where we've seen divergences occurring. Now, coinciding to that, we've also seen that the gold to S&P ratio spikes to the upside, as well as the gold to silver ratio. And that just beautifully shows you that gold tends to outperform not only the S&P 500, but also silver in times of economic stress. And that obviously makes a lot of sense, because equities and silver certainly are not having the status of a safe haven asset as gold has. And as we're currently seeing, exactly those indicators currently signal a recession warning once again. We obviously do believe there is a lot of downside potential, but we're later going to have a look at some indicators that are beautifully underlying that even more. And so what you can argue here is we do see that kind of divergence where crude oil prices are spiking to the upside as this ratio is moving down. So we do have this divergence happening once again. We do obviously also see that the gold to S&P ratio has moved to the upside, and we also see that the gold to silver ratio has reversed and is currently starting to consolidate, maybe already starting to spike to the upside once again. And so we do see those signs currently appearing, but those are not the only indicators that are currently showing you recession warnings. We do see that those last few recessions here, for example, with the dot-com bubble crash, with the great financial crisis, and also the COVID crash, all of those recessions, beautifully marked with those red areas here, they have occurred after we've seen a crossing of the federal funds rate and the US 10-year bond yield. And that ultimately means for you that the investors are essentially having a risk premium on bonds. We do see that interest rates, or the federal funds rate, is actually going below the rates that you receive as a bondholder for 10-year treasury yields or 10-year treasury bonds. And so historically, those convergences that we've seen actually marked the beginnings of those recessions, and you are actually seeing that this convergence has already happened, and we are currently seeing this risk premium happening or being valid for quite some time now. And to add on to that, we'd like to take a look at a quite interesting chart, which seems quite complex on the first sight, but it is actually quite simple. We do have the S&P 500 divided by the unemployment rate squared, multiplied by the US inflation rate year over year, multiplied by the US interest rates, and normalized with the M2 money supply, or divided by the M2 money supply. And what you get if you do that, it is this chart. And this just also beautifully marks those last few recessions. And obviously makes a lot of sense when you do have the unemployment rate spiking up, you do have the denominator of this ratio spiking, or you obviously have this ratio falling. And similarly with those interest rates and inflation rates. And you just beautifully see we've had this high here back in 2022, and since then we've declined significantly, and those declines historically always led to recessions, which we are still waiting for here at Chronos. And so if you like to analyze those cycles, if you like this approach of taking a look at those cycles, don't hesitate to click the like button, subscribe, and also give us your opinion down below in the comments. And so let's conclude for this video what we've just assessed, what we've seen signaled, and what we are obviously seeing are a lot of recession signals. We are seeing this divergence with the copper to gold ratio. We are seeing the gold to S&P ratio moving up. We are seeing gold actually outperforming the stock market for quite some time. In fact, if you invert this chart, then you do see the top in the S&P measured not in dollars but in gold. It has actually been here in 2021. And so that is really important to keep in mind. We do actually see the S&P 500 being manipulated by the fact that the dollar is no constant. It is in fact inflationary, and that is why we are actually in a bear market since quite some time if you would measure the S&P in gold. And similarly, we do also see that the gold to silver ratio are currently spiking from this long-term downward trend, which has actually signaled a risk-on development and is currently starting to consolidate, or maybe even starting a new upwards trend, which historically, as we've already assessed, led to massive crashes at natural gas and also at crude oil. And so we believe that energy prices are certainly currently seeing some short-term volatility, and we do not believe it is impossible to see some bullish strength regaining to the upside. But what we've just assessed are long-term structural signals that show you bearish pressure, and that show you that a sell-off is in fact quite likely in the next few months. Now, it's hard to time it, but we will update you on that in the further videos. And so if you don't want to miss them, please make sure to subscribe, like the video, check out our Discord server to get the latest information, and also give us a thumbs up, ask questions if you have them down in the comments. Just give us your opinion about what you do believe is going to happen next year to oil prices. Thanks for your support. Really appreciate your effort in this community. See you the next time. Bye bye.